that, let's get you a CNBC TV18 exclusive. Ekta caught up with Sharvil Patel, Managing Director of Zydus Lifesciences at the BioAsia 2024 Summit, and started off by asking him about domestic formulations and, of course, the business trends in the quarter gone by. Take a look.
So I think we have been, over the last 6 to 8 quarters, doing a lot of changes to the business. It's been a legacy business, a business that has been there for a very long time. So pruning the portfolio, increasing the reach, making sure that we have the right teams focusing on the right therapies. I think all of that was the first part of the exercise that we did. Then I think a clear focus on our innovative portfolio. So today, if you look at it, saroglitazar, desidustat, rabimaps, all the ADC, new ADC, we launched the monoclonal antibodies, and also incremental innovation like dihydrogesterone and other things. I think all of them are really scaling up as new molecules and new products. And with that effort and a good base business that is done well, I think we have seen good growth, and we have been aspiring to do a double-digit growth. This was obviously an exceptionally good growth for the quarter. But I think our efforts are on to make sure that going forward also we continue to deliver on at least market equal to growth.
Okay. In terms of India, it's around 40% of your total sales. Any plans to scale it up, say, via M&A?
So I think we obviously, tactically, we do keep looking at opportunities to see what could better fit the organization. I think what is important for us is not only scale, but how do we grow from whatever we are able to acquire. So I think a growth driver is very critical in terms of what we look for acquisition. I think what we as the company have done well is to acquire brands and fit them right into the ecosystem that we have. So that would be our first priority, to see how, if we are able to buy tail-end brands or brands that are getting divested either as the first opportunity. But yes, we keep our eyes open to see if there are other opportunities out there. But I would say we are not aggressively pursuing any M&A when it comes to large M&As.
Well, definitely, because I haven't heard Zydus's name, around the Novartises of the world or the Ciplas of the world. So large-scale M&A is not something that you all would consider.
I don't think one can ever say we will not do anything, but currently our focus is to be more specific and targeted. But if the right opportunity comes up, we would definitely evaluate it, and if it makes sense for the future growth and continued growth, then we would look at those opportunities.
Why are MNCs such as Novartis probably looking to shed off their assets here?
I guess it's also to do with the similar problems that they face, right? It's a legacy business versus the new molecules, and I think I would assume that the investments that go beyond new products is far higher than the legacy businesses. So I think it may be a more focus-oriented or a global focus that they have on particular therapies, which is what they would probably want to promote here. Could be one of that, and always Indian companies are very competitive and challenging, I would say, in this environment. So I think that also must be playing some role.
US sales, they were flattish in the previous quarter gone by, $221 million. Why is that? How much did Revlimid contribute? What can we expect in terms of a quarterly run rate?
So in the last 2 quarters, we don't have any Revlimid sales. So we don't. So I think all of the sale is non-Revlimid. Revlimid is the quarter one phenomenon for us. I would say we had a decent quarter. It's a year end when distributors are also looking at normalizing their inventories. And I would also say that the business has done very well because the new products, while we may have had attrition, but the new products have contributed good to margins. So if you look at the overall margin profile of the company, even without Revlimid, has been very good.
I'll get to margins, but quarterly run rate for the US, when do you scale up beyond 220?
So quarter 4, quarter 1, obviously, we'll see a large scale up in revenue.
All right. Asacol HD, that's expected to see competition soon?
So far in the very, very near future, we don't see it, but we do expect, as we have expected every year, that this year we'll see competition. So our current assumption goes that in FY25 we will see some competition on Asacol, but I think we have had our fair share of exclusivity that we have enjoyed. So